Ladies and gentlemen, the US-China trade war deal to be signed or to be continued. How are you doing this year so far? Did you evolve yet? Do you know what is actually working right now today? Banks are reporting next week. Newsflow and analysts come back with an absolute bang for 2020. Is Tesla ready for $500 this week? Our algo levels, as well as our final thoughts. I am Mark Melnick. This is the Newsbeat Show. Good evening, ladies and gentlemen. Welcome to the Newsbeat Show. Have a jam-packed episode for you guys. But by watching this show, you're going to pause on the next slide, this entire video, read it, and then hit play. Thank you so much for doing that. Okay, let's get right into the mix here. We're going to talk about our little agenda here today. We have a few things to discuss. We're going to talk about the US-China trade war deal to be signed or to be continued. Now, what is the pun on to be continued? Is there any reason why I think it wouldn't be signed this week? No, but if you remember, that thing was sort of going on since 2018. I mean, we've had that US China trade war deal looming for so long. To actually just get to this point right now of where we are. And what is going to happen with the market? I think everybody is going to be unsure of that. And I'm going to explain my little thesis here, which I've had forever, where I was basically saying, the worst thing that we could do for the market is sign the US China trade war deal. When I say that, a lot of big Wall Street honchos and traders alike, they'll come to me and they'll say, "Oh, Mark, you're crazy. This US China trade war deal is going to be amazing. We're going to sign it, and finally, then the market will be able to go up." And I look at the charts and I say, this is a weekly of the Qs. I mean, you can pull up the spiders. I don't care what metric you want to use to show the market. And I'm looking at this and I'm thinking the following. I'm like, well, if you look overall on the spiders on this entire rally, we pretty much have been dropped out on volume. On average. I mean, it didn't really lower that much, but even it's a little lower than it was earlier in 2019. I'm referring to 2020 here because January sort of just started. And when you look at the chart, the volume is a little bit tepid from December till now, right? So I stop and I say, okay, the US China trade war deal is going to be signed. What is the actual action that happens afterwards? Well, my argument is the best thing for the market is to never sign the deal. And I think that the US was doing just fine without the deal. And you know what? I think China was doing just fine without the deal. Not as well as the US, but just fine. And then what happens is this Wednesday we're scheduled to sign it. What do you think happens then? Well, then we're already looking forward to signing phase two of the China trade war deal. And that's when you're reigniting the drama. You see, some people, some traders, they have they have the short-term memory of a goldfish. And I don't say this in a bad way because I was sort of this way for like at least 10 out of my 20 going on 21-year career. We're almost like lemmings in that point where we just look at the market and I'm seeing commonalities for why we should go down. And I'll remind you. Do you remember in 2018 when nobody knew what the next trade war deal would be signed with China and the US and both sides were posturing and both sides wanted to milk as much as humanly possible? Remember that? You had China over here saying we won't give this much, and US here saying we won't give this much, and they just kept butting heads with each other. China's like, we're not going to buy your agriculture. US is going to be like, you know, screw your pork products. We're going to make our own, and we're going to just sit there and we're going to fight. We're going to bang heads until both sides of the table got a little Disney. They had like the little cartoon stars and little blue chirping cartoon birds flying around their head in a circular motion, of course, orbiting around their crane. And then they came up with a deal. Then they came up with a deal. They came up with a way to resolve their differences. And now China is going to buy all the soybeans that the United States of America can produce. But what do you think happens when it comes time for phase two? Are they going to be like, well, all right, look, we don't want to screw with each other. We all know what happened last time. Just give us this and we'll give you that. Doesn't work that way. They are going to go back to butting heads again. The best way that I can stem an analogy from what happened is it's almost like a boxing match. And they both jab each other and they jab each other and they're jabbing and jabbing and then it's like ding, the bell rings and then the fighters sit down and now there's a decision and they announce the winner. Okay, United States of America wins, and then they hug afterwards and they whisper something in each other's ears in which you can't hear, and then they're best friends right after they fought. You know what the phase two is? The phase two is like the rematch. It's like the box office hit rematch. It's not like they're going to be meeting at an ice cream parlor and they're going to say, "What is that? What do you like coffee ice cream? I love coffee ice cream. Oh, what do you want sprinkles on that?" It's not going to be like that. It's going to be like the next fight. Like I could use a million boxing analogies, but it's going to be like the next time. It's like watching that amazing fight on television, and then China's coming back saying, I'm gonna get you this time. I didn't like the way the refs were. You called me with some things. I learned your moves. It's gonna be like that. And when they punch each other in the face, do you remember what happened? Let me remind you what it looked like when they were punching each other in the face. It looked like this. It looked like this back in late 2018, where the Spiders went from 293 to 233. We had a 60-point drop in the Spiders in a matter of a few months, 3 months and a week, about a 60-point drop in the Spiders. That is a no joke move. And then after it got situated where we felt like, okay, the US was going to win the battle, which is very apparent here based on the US dollar Chinese yuan. If you remember back in 2018, the yuan started, strengthening here, and that's bad for China when this number goes up, and it's good for the US and vice versa. And then it drifted down, and then as you could see, this just kept going up and up and up and up and up. And as this goes up, you're basically getting more Chinese yuan for every dollar you spend. And that's bad for China because it devalues their currency. And that's not good for Chinese products. They work harder to make less money, or they work just as hard to make less money, and they have to work harder to make the same money and sell more of the same product to make the same bang for their buck. So, just looking at this here right now, I'll stop and I'll say that we're ready for round two. I think this Wednesday is going to signal a short-term top of the market. I'm not calling bear market here. I'm not coming out and saying there's going to be a bear market, but I am saying we are going to correct. How much? I would like the larger the better when we correct, because the bigger the up move, the bigger the down move, the quicker we go back up. So I'm obviously still bullish overall. I find it crazy to actually hear people who say they're not bullish. I mean, I can understand not wanting to buy, but looking at this chart and where we just hit like all-time highs on Friday in the Qs and all-time highs on Friday in the Spiders, I mean, I could understand you thinking we could go down, but do you really want to bet on that? I mean, I don't. So this Wednesday is going to be very interesting as that trade war is to be signed. How are you doing this year so far? Did you evolve? Do you know what is working now? The market had an evolutionary shift. So I have something really cool to show you now, and I'm going to teach you how to not only what's working on my end and what I see working right now, but what is actually working overall on your end. So what I did was I'm picking names that I have written down here on my paper here. I have it written down from Friday. And I just want to show you guys something that is actually working in this environment. So we were watching NVIDIA We're watching NVIDIA for a long on Friday, and I'm just showing you the chart with just, you know, bare bottom information, just like the candlesticks and the volume. I'm no fancy parameters. Just want to show you this. And yes, I do use parameters when I trade, but for the sakes of this demonstration, it's important that you just look. And you look at the chart and you see whatever, NVIDIA, a little whippy here, hard to figure out, went up a little and then dropped. And I was looking to buy this thing. You might say, maybe not the best name to buy, Mr. Melnick. And then I'll show you an Apple, another name I was looking to buy, and you saw it went down and then went up, and it digested, and then it dropped and went up and dropped. And you might be like, well, how would you catch that one? And then I'll show you Six Flags, a name I was looking to short. And we did call a short here, but you might say, all right, this one sort of digested, grinded all day. How would you actually time? Let me move my face to the left on this one. How would you actually time when something like this would go down? Then, of course, there was the earnings name we are watching, KB Homes, and this one gapped down, so I was looking for a short on this one. You might say, where do you short this thing? I want to show you something. It's very important. The way you figure out what is working now is you have to strip down naked. Everything comes off. And I mean everything. Everything, no stage fright, nothing. Everything comes off. Everything comes off. So you have to strip down every single technical parameter that you have and then just add one and see if it worked for your name. So what I was doing is I added a simple 5-minute, this is a 5-minute chart, an exponential 8 moving average. And you could just see it right here. It's right over here. It's on TC2000 and free stock charts. You click exponential 8, you add it, and there's your answer. So right now, I know when this yellow line, which is the exponential 8, when it hits for the first time only, not second, not third, even though it did work on the second and the third and the fourth and not really the fifth. We're talking just the first time only. It's right over here at 245.95. The stock flushed through to 245.61 and bounced to 247. It bounced to $1.40 within 5 minutes. Now all of a sudden, this choppy looking chart, which may on initial look be hard to read, turns into a profitable solution. An Apple, with added on this thing, this grind down in Apple looking for a long, the first time it hit the exponential 8 was at the bottom of this candle here. 311.70. It hit 311.67. The very next candle went to 312.45. Apple bounced about 75 cents in 5 minutes. That is enough to make money. You can catch 25, 30 cents of that for a quick scalp and make good money on the option side. All of a sudden, a choppy chart like Apple makes sense. To the Six Flags example I was giving, right over here, for the first time, it hits the exponential 8 for a short, breaks 35.74, hits 35.75, just drops. Red, just drops down. Look at that. And I see some of you are probably thinking, but Mark, it worked on the second time, the third time, the fourth time. I'm only referring to the first time. So if you see something else that you like, exploit it. How about that KB Homes on earnings? Choppy looking chart, right? Except it hit the exponential 8 right here. Hit 36.15. The exponential 8 is 36.13, and it hit 36.15. Dropped to 33.58 on the next candle. That's a money shot right there. Look at that. You short at the top of this candle, bang, right here. Next candle. I don't even care about the next one that went lower or how far it went or the fact that if you held it all day, it would have gone back up. I don't care about that. You want to know what I care about? This. And you might be sitting there and you might be thinking to yourself, how much can you really make on these moves? And my answer to you is millions of dollars a year with relatively small money. It's kind of funny. I don't talk about it, but people are like, how much money do you need to make the money you make, Mark? On average, I'm trading with less than $100,000. Why? How many options can I take? You think I'm going to buy $1 million worth of calls? Large buying power is meant for common stock. Small buying power, for me personally, I could speak on my own behalf, is meant for options. So you don't need a lot of money to make a lot of money. When I first started trading options, I turned $25,000 into well over $1 million. You don't like need a lot of money. And by the way, 25 to a million, I never took more than like $50,000 worth of open positions at any one given moment in options when I did that. I know it sounds like, wow, what an amazing claim, but it's not that difficult to make money trading options. Trading options is for me the key to risk management. Options, when you buy common stock, people are almost like, oh, you have to put in a stop right away and whatever. When you buy options, your stop, if you do it the correct way or the way I do it, you could know what you're losing before you throw it on. See, when people buy 1,000 shares of something, like 1,000 shares of an Apple or a Nvidia or whatever, they don't really know how much they're going to lose. If you buy $300,000 worth of Apple, you could set a stop. You could hope you don't get slippage. You could hope that your emotions don't get the best of you and you don't put in a stop order. You know I'm talking to some of you. Heck, I'm talking to myself if you want to go back long enough. When you buy options, when you buy options, and you buy $500, $1,000, $5,000, $10,000 worth of options, that is the most you can lose. People don't realize. They say, Mark, what's my risk if I buy 1,000 shares of Apple at $300, for example? And they're like, what's my risk, Mark? And I'm like, $300,000 is your risk. Well, Apple's not going to zero. I'll be like, oh yeah, of course not. Of course not. I I would agree with you 99.999999999999999% of the time, but that's it. I can't say it with certainty, can you? But no, you're not going to lose $300,000, but you could lose $1,000, 2,000, 3. You could lose 10,000. You could get flustered that your Apple position went against you right away and then double in. What are the strategies that I'm teaching you? The strategies I'm teaching you here, the strategies I'm showing you have psychological toxicity blockers already built in. So like back on Nvidia, you're not buying through the breakout of a candle here, even if it eventually worked. Your P&L isn't going down. It flushes through the exponential 8, you buy it, you're up money almost instantly. Apple, you buy right here at the dead bottom of this candle, you're up money, bang, instantly. You know how many traders suffer from being down money immediately when they enter a position? That is why this works. This is how you prevent this is how you become a trader for long term without suffering psychological toxicity. Six Flags, you shorted right here. How much did it go against you when you shorted it? Oh, I don't know, Mark. I don't know where it got filled, but you could look. Very little, right? What was the worst that could happen? That wouldn't have shaken 99.99999% of people out. You see, I think it's very easy for people to talk about, I bought here at point A, I sold here at point Z, and I made this much money. But why isn't anybody talking about the journey? Why isn't anybody talking about what happened in between? As if that doesn't mean anything. As if you just really set it and forget it. This is how I do it with my stop losses. This is how I do it. They're all full of manure. You know why? Because some people are psychologically stronger than others. Me, I didn't have a lot of psychological fortitude when I started trading. I had an ego. Why? Because I was making money. So obviously I'm not wrong in anything I do. I can't learn. And you know what? That was the stupidest thing I've ever done because I was unable to grow. I make money as a trader. I don't need to learn more. Wrong. That's how I thought. And I know I was wrong. And I could have still been making money, loaded with toxicity, miserable in life, miserable in every other aspect, but profitable in trading. That's not what life is about. You want to enter a position? Most of the time, you should be up money immediately. And if you're not, you are doing something wrong. I never believed that. Usually, when I open up a position years ago, I was down money almost instantly. Then I would hope the market comes back, and if it flushed down too quick, I would double in real quick. How many people could relate with that, with what I'm saying? I've been doing this 21 years. Give me an 11 if you could relate with what I just said. Like, you buy a stock, it flushes down hard immediately. Like, what the expletive? And immediately you slap it and you buy more. And then it comes back and you're just above break even and you sell most to all of it because you're so happy that you were given a second chance at this trade, almost as if it were a second chance at life, and you dare not question its sustainability or viability in the future. You dare not do that. And then, of course, there's the other side of the coin where it just kept going down, and now you have one of those I'm down, I'm down 10x, and I make X when I'm right, and I'm down 10x when I'm wrong. And then you turn into one of those traders, and you have no idea how you got there. So when I'm showing you a strategy, it's not just about making money. It's about preventing psychological toxicity, showing you that you can be up money right away, showing you that you don't have to suffer from these things, taking you on the journey, not from showing you A and then Z, taking you on the journey from A, B, C, D, E, F, G, H, I, J, K, L, M, N, O, P, Q, R, S, T, U, V, W, X, Y, Z, and showing you every single step of the way. That is the difference between what I try to do now. I didn't do that 10 years ago, 15 years ago, 20 years ago. I didn't do this. So when you strip down your charts, remove its clothes, I don't care. Play like play like creepy elevator music in the behind. Have like a little strobe lights going off on top and host your computer up on like a monitor pole and be like and just sit there with a bunch of dollar bills if that makes you feel better. But take down all the nonsense on your chart, strip it clean, and then slowly add a parameter and see if that gets you somewhere. Slowly add another parameter, see if that gets you somewhere. Slowly add it. Because as you do that, you will know what is working for you and what is just wasting your time, harming you, and making you think things that you shouldn't be thinking in the current environment. And don't get me wrong, you're going to have to always do this. You're going to always have to strip your charts down, not every day, but every so often. You should do it at least once a week, once 2 weeks, 3 weeks. You should do it as often as you can because you need to know what's working now. And only then can you apply a strategy. You want to know the difference of how I, was making, 30,000, 35,000 my worst year, or like 100, 200,000 like an average year into making millions. You want to know what changed? You want to know what changed about me? I admitted to myself that every strategy I do works during certain market conditions that are completely random and unreadable ahead of time, but are completely readable after they directly happen. And that is exactly the journey in which I am taking you on. Slap the like button if you like what we're doing right here. Bank earnings, okay? Bank earnings. Banks have a very interesting way of not sharing future projections when it comes to earnings per share or revenues. If you don't believe me, just ask Bank of America, Wells Fargo, Goldman Sachs, Morgan Stanley, PNC Bank, and some of the other Citigroup and some of the other amazing United States banks that are reporting this week. We will be calling them. We do offer Newsbeat earnings. We have a Newsbeat earnings list. We're positive right now on our Newsbeat earnings list. We just started last week. We're up money. We offer it to Newsbeat members. I don't know how many banks I'm going to be putting in that list. I don't trust them. I don't trust them. Why? They don't trust them. A bank is not willing to share their earnings per share. Like a lot of these companies, they give forward-looking projections. Like a lot of these companies say, we think we're going to make this much in the future or that much in the future. And then you could hear it right from the horse's mouth. They'll be right, they'll be wrong, and Wall Street will react either up or down. But banks don't like to do that. They like to zip lip, throw away the key. They don't like to talk about their future projections. Funny how you have a foggy cloud of transparency when it comes to the companies that are too big to fail. Interesting how that happens. How cute. Let's go into number 4, news flow and analyst. News flows and we had a ton of news flow last week that came out of nowhere. It came out of nowhere. I was so happy to get all that news flow. All these analysts are coming out. We're getting great intraday news flow. There's no better time to be a Newsbeat Live member as of right now. The flow is going to continue. We're going to get a lot of it, and then it's going to die. And then we're going to get a lot of it, and then it's going to die, and we're going to get a lot of it. And it's cyclical, just like everything else on Wall Street. So I have been super pleasantly surprised by the influx of analyst upgrades and downgrades for stocks. I've been pleasantly surprised by the influx of intraday news flow. I've been loving it all. Next, I want to show you my thoughts on Tesla here. So we have the next one on the radar right now, which is Tesla. And to me, Tesla is doing something that I find just absolutely adorable. And here it is. Like, here is Tesla. Here is Tesla. Look at this. You ready? Falling wedge. Now, Mark, how can you draw that trend line? I know you're the trend line guy, Mark. You made the algo course. You made T3's #1 selling course of all time. I know you did that, but what's special about this falling wedge here? You know what's special about it? It has a 100% chance of resolving tomorrow. Maybe it will hit 500 tomorrow. You're only a day away. Now, maybe it does, maybe it doesn't hit 500, but here is the trick to get involved for me. Two tricks. One, you have algorithmic support here on Tesla. Two levels, 470, 474.62. I'll write them down and we'll talk about them tomorrow if they hit on the Newsbeat show. And we have 471.05. And those levels are important because those are the true support levels in Tesla. In terms of breaking out to the upside, now remember, Tesla hit 498.80. Tesla did hit 498.80. We never got to 500. The breakout on Tesla, 484.94. 484.94. And if you are looking, ladies and gentlemen, at the futures, which can change, some drama can come out of anywhere. The futures are up right now as we speak. And just so you know, if you're like wondering, like, how does like, because some people are like, oh, the futures are up, and some people don't even know where like to access it. I would just go to just go to Bloomberg futures. This is what like just go in, just literally go in Google and just type in futures Bloomberg, hit enter, and it's the top one. And it'll show you right here that like the Dow Jones minis are up 49 points. Can I extend it bigger? All right, yeah. So like the Dow Jones minis are up $49. The S&P 500 minis are up 5 points. You have the Nasdaq 100 minis 18 points. Shows you the Mexican market. Shows you I'm not sure what markets those are. Shows you European, Middle Eastern, African markets, Asian Pacific markets. So you do get a sort of a nice overall view of how the world is doing at night, and you could even see the time in which it updates. It usually updates after this site will usually update after 6:30 p.m. On Sunday, so you could always see like where we're walking in tomorrow. It's not like this big secret when people are coming out saying, "Oh, I think this is going to happen tomorrow." But back to Tesla, just random tidbit there. Back to Tesla, $484.94 is going to be the breakout here on Tesla. Obviously, a name we're going to have to watch tomorrow. And while I don't think Tesla, just to be on the record here, even though there's a chance of it, of course, I do not believe Tesla hits $500 tomorrow, but there's a very good chance we hit it before Wednesday, especially if the market wants to ramp up into this US-China trade war deal. And as I said before, I think we fall after the deal is signed. Algo levels. Algo levels. So last Thursday for Friday, we said the spiders. We gave you a level of support at $325.36 on the spiders, and it hit a low of 325.20. This was based on our algo trend lines. Here are the algo trend lines for tomorrow, Monday. You can screenshot them. Don't tattoo them. Don't carve them into your table. They change every day. You can go ahead and screenshot it. You can pause on this video and write down the levels that are meaningful for you. And of course, they are used for educational purposes only. And with that, my final thoughts, I'm just going to share my final thoughts here in the video, is 2020. I find it amazing how so many traders get so hyped up for this new year. I'm up a very low five figures for the start of the year. Not really good, not really bad, just sort of like on par for me. I sort of been just sort of like chillaxing. I sort of been in that like chillax mode where I just want to see this US-China trade war deal signed, and then I want to see the volatility that ensues, and then after the smoke clears, I think we're going to get a ton of great opportunities. It's very important when people are like, "Oh, 2020 is my year," and I hear people say that all the time. How many of you guys say that all the time? Oh, 2019 is my year, 2018 is my year, 2017 is my year. And it's good. Don't get me wrong. I love the optimism. I love the thing, but I have to stop and ask you, what on earth are you doing for yourself to ensure that you are changing from 2019? Are you just going to apply the same boring old methodologies and hope that something changes and pray that the market is going to suddenly cater to your strategies? You need to try something different. Try the strip down thing that I showed you. Try stripping off all your parameters and adding them one at a time and see if there's a correlation between any of the names you're watching. You don't have to use the exponential. You could use your Fibonacci's, your relative strength. I don't really care. You could use whatever parameter helps you sleep well at night. I really, it doesn't matter as long as you can find a statistical correlation with the names you watch and say, when this happens on 70% or more of the names, if I'm watching 10 names, this parameter would have helped me make money 7 out of 10 times. You found something that is very useful right now. Stop thinking that the market is based on the same strategies that people keep spewing out. One of the things that helped me propel myself to be a millionaire in this current environment is just simply recognizing that the market always changes and that my strategies might work today, might work tomorrow, might work a week, a month from now, but it's not going to last forever. And you have to admit that. And I know some of you who have spent a lot of money on educational courses, etc. Educational courses are usually as good as the day they come out. And a lot of these educational courses on Wall Street and a lot of these things are the same tired old, my favorite five chart patterns, my favorite five candlestick patterns, my favorite 1, 2, 3, A, B, C, D, E, F, G, LOL, BBQ, WTF, LOLOL, Rofel Mao. Look, a lot of those strategies will work in certain environments, but just open up your mind and just accept the fact that there will come a time where it doesn't work. It might not even be now. Maybe now your strategy works. And if it does, exploit the living out of it. But every week you should be able to look back and say, which one of my strategies worked? Which one of my technical parameters were good? Which one of my technical parameters were bad? And you should be able to do that even on names you didn't trade. You should be able to say, well, obviously I didn't trade it, but here were the 40, 50 names I was watching for the entire last week. Maybe I should just do a rundown and apply it. Because if you're able to do that, I could assure you that your odds of success has exponentially grown higher to make it a 2020 in which you will never, ever forget. I hope you guys enjoyed the Newsbeat live trading broadcast. Right now, we're going to do our group coaching for room members. If you are interested in joining, there's a link in the description. Happy trading, make money. I will see you guys tomorrow on the Newsbeat live trading broadcast. Have a wonderful evening.